Hello everybody, it's Matt from Invexa Trade. It is Saturday the 8th of August 2020 and I'm just using this real quick video just to show you chart patterns. Everyone's heard of them, bull flags, bear flags, rising wedges, falling wedges. But I wanted to show you how you can actually use it in reality to train your eye. Visualizations are key. There's no indicators on this chart. This is a Dow Jones Industrial Average Wall Street hourly one chart. This is the top of the move in February. Quite often what happens, and we'll learn more about that in Elliott Wave, when a cycle or price cycle is coming to an end, it's called, generally you can get things which end it, such as a rising wedge when the market's reached the peak and then drops, or falling wedge when it's bottomed and then goes up. So just show you what happened here using my eye. We're literally looking at joining these points towards the end. Okay. Some people include the wicks, other people don't. I do like to include them with mine. What we do is you just literally look to join the tops and the bottoms. So at this point, you don't know exactly when price is going to drop, but one of the keys, and triangles are amazing, how they work in trading is amazing. But generally, with rising wedges, falling wedges, the apex is where the 2 points meet. Generally, at these levels is where you should be looking. Sometimes you get what's called a throw over. The price comes up and then drops. It's like a fake out, but in rising wedges is called throwovers or overthrows. Price come down quite often, you get a retest, but obviously the market just completely fell away. So here you had a beautiful rising wedge here. You would sell on the breakdown. Ideally, what I would want to do is sell on the retest. Obviously, you don't necessarily get that. So your other option when it moves like here is you sell on when the price breaks below the moving average. You then sell on the retest above, and then bang, down it goes. So you've got this tool on trading. I must admit I don't sort of use it massively, but just to give you an idea of the profits and where you're at, let me just see. We want a short position, so you enter that. This is all for your risk rewards. Let me just move this down. You can see that's like 50-50, so you're no good. That you do not want that. You'd put, just to give you an example, your entry would be, you'd ideally want your entry on the retest of the moving average. If you can't get the retest of the triangle, you don't chase the move just in case it then goes back up. You'll wait for the retest. It's a lot safer. Stop loss will obviously be above that point, above the apex. So at that point, you are looking 364, which is quite large. You wouldn't really want that. But if I just put that into perspective, okay, it went down 11,000. So again, the risk reward on that's just amazing. Just using that one chart pattern. Word of warning on rising wedges. Everybody seems to know about them, sees them. Quite often they can break above. So what you do, and we'll show you on the other chart patterns, is you wait for confirmation. You wait for the retest. So if it doesn't retest the apex, drop below moving average, and then when it comes back above, then you enter position there. They're really good. They're common, and actually they can fail. So not all of these patterns are 100%, but they are up in the 70s, 80s%. Next one we get is what's called a bear flag. So price comes down, fairly straight move there. It then consolidates. So we've got a bit of consolidation there. Using this on here again, joining the bottoms. I know it could be more accurate. It's just a quick video, and then joining this. Sometimes if you don't see a second point here, what you can use is the previous support. So you see that little wick there. So we know that's a key zone because price bounced off it quite sharply before crashing through. So you join the support with the resistance there. Target price, and then obviously it comes straight down. So what you can see there is a flag, up, so down flag. The target for these normally, this pole you got there, so you place the same pole. So again on TradingView, you can right click, clone, and then bring that. If I click it, bring that down, and that's your first target. Now what you can do, depends what your risk appetite is like. You can just have a trading stop loss, and you would erode it all the way to the bottom. I mean, you can again use Fibonacci and other tools and indicators to look for bottoming signals. But again, you see, so basically sellers are in control. They consolidate. Some people will be taking profits here. It's a huge drop. Some take profits. Some buyers are nibbling in, and then bang, comes back down. I'll just remove that because the next one I'm going to show you is a falling wedge. So a falling wedge is the opposite to a rising wedge. So rising wedge is at the top of the market, ending diagonal. and a falling wedges when the market's sort of bottoming. It's not massively obvious here. So again, what you do, the first thing you do is just join the main points, just join them up like that. Second bit is to say, right, well, you know, as prices consolidating, where's the peak and where's the troughs? I've clicked the wrong tool there. Delete that Fibonacci. And we join the peak, always join the peak of the move, and then just join, see the wicks here and here. We look to get a best fit and target again. Look at this. I mean, it's perfect. The apex, hit the apex, and bang, up we go. What you can use when you get in there as well, if the market's dropping and everyone's calling the end of the world, as they do, that's normally when mass market begins shorting and then it rips the face off and bounces. Just start having a look for indicators. So again, just a bit more confirmation. We've got the awesome oscillator there. We've got RSI, and again we've got divergence. No huge divergence there, but you join, okay, this bit for the, when you look at the indicators, the start of the move to the end of the move. Now target for the falling wedge is back to the top, okay, and you got that perfectly. You can see that there. So that's the target achieved. And then you can imagine, because a lot of people would have thought that was a sell, you know, they might not have sold there, come down, they might have sold that retest. Pricing comes down, and bang, up we go. The next thing here is opposite to the bear flag is a bull flag, so we have a nice, fairly straight move up here off the lows. Price then is consolidating in this range, and again we're just joining the bottoms. And then you've got, so again, you've got the pole, you've got consolidation. Like, don't get tricked into thinking it's a sell when you see these things, because that's what a lot of people do. And you know, they jump in and price moves up, and you think, well, why is it done that? So again, target, you know, it's not a straight move up from there, but you've got really decent profits. Where do you enter the position? Same rules. You buy low and you sell high. Buy low, sell high, and you avoid the middle. You don't get in the middle. So what you would do is you try and get in as low as possible. So once you've joined this point and these points, you think, right, there's some level of support. I'll buy here, a stop loss down here below that last low point, and then up it goes. And you're talking, I'm not sure you can see these points. Big moves. Okay. Next one we've got here is, if you ever listen to bears, sellers of market, head and shoulders, everyone tell you is bearish. So I'm just going to show you what the head is and how you get that. Basically, you're looking for a left shoulder. You're looking for a right shoulder. You are looking for what they call the head. Now, for this to be true, neither shoulder can go above the head. Head must always be higher. And you get what they call the neckline. So, neckline is there. Don't worry about this bit. This is the neckline from the shoulder, okay? And then what the next thing we're looking at doing is to predict a target. So this is, you can see this is bullish. This goes up. People say, well, how can that be? So I'll show you this tool to get a target and then an entry for you as well. Okay, and this happens all the time. This isn't just on Wall Street. This is across all markets. These chart patterns work because they map human behavior when people buy in, when people sell, typically where they put a stop loss. And also there are algorithms at play, and so they are mapping them. These patterns repeat over all markets all the time. You just got to train your eye to spot them. So what you do is you do line of best fit, and it's a technically joining these points up, okay, to just try and get that there. It's a line of best fit. So it's not always exactly perfect, but once you've got this line, your neckline in place, once you cut through the top left shoulder, and you cut through the bit of the shoulder here to start the right shoulder, it comes down, bang, and it goes there. So this is the target. They're never always perfect. There's always a bit of trickery and games being played, and all the rest of it. So there's another target for you there, okay, where you can see it. So just bear in mind you've got the target area, and again, where do you put the stop loss? So you enter here. You've got two trend lines coming down. You have your stop loss below the low point, and obviously then you ride the profits and wait for it to go up. So these are really good points. The next way you can do it, and if the market collapses, it collapses, to pick your target for the top, okay, you do exactly the same but opposite. So you start bottom left, and then you just, again, line of best fit. You're trying to join as many points as possible to get the most accurate. So if I do that first, I could potentially put a second line in here, just because it's slightly missed this point. So I could put 2 in, No harm in that. It just gives me a better thing. And then you can see between the two, you would have expected. It doesn't the problem with this? It doesn't give you obviously the timing, but there's the point between these 2 points is hitting perfect. Again, what you want to be doing when you're looking for your entries, you say, well, where are my indicators? What are my indicators? Is there any divergence? Do they support the move? And again, where do I take my profit? And I mean, you'd be very happy. You probably would have taken it before there. But what a lot of people will show you is you to get another profit timing. You join this, so it's between the head and the neckline, and then you can literally right click. You would clone this, clone that, and then let's move this up without. I might just have to move that out of the way. Get that out of the way. Nope, doesn't want to play. Well, you get basically you would add that to the top of the head. This is meant to be a quick video, so I'll leave you to that. Next one we've got then price then collapses down. So just bear in mind what the difference here is. Here, bear flag, you have consolidation upwards and then the move down. So that's how you knew this wasn't bearish move there. So despite price coming down, there's no continuation. But what we do have, again, just join in the tops. Literally join in as many of these wicks as possible. I'll just join that there. And again, it's fairly amazing. You must use this. What happens here? Talk you through the price. You've got the consolidation. Price breaks out. It's staying above the moving average. But look, I mean, look at that. It comes straight back down to the apex again. And again, that's your entry. Stop loss below, entry up, and then you go long. So this happens all the time. These triangles, they break above, come back, and they use it as a springboard to go back up. So we've got that. So you always look at those. So there's just some real quick video for you just to show you some of the chart patterns, and they're really good. You've got to train your eyes. So we covered the rising wedge before, dropped straight down into a bear flag, straight back down. Cycle ended with a falling wedge, came up, bull flag up. We've then got the head and shoulder pattern, which again a lot of people say is a bearish sign, and it's more often than not. You actually see this in an Elliott wave 4, so it goes up, wave 1, wave 2, what we call a sub 3, and then you get the sub 4 and then a 5. So quite often a wave 4 can look like a head and shoulders, everyone's shorts, and then price goes up. We've got then triangle. The other way this could have broken down and then you would have been wary would be if, say, price came down there. If it broke to the bottom side, you would then look for retest of the apex, get as close to that retest as possible, and then come down. So again, there's no guesswork involved. You just train your mind to look for the technicals, the setups, and use them to make profit. So look, I hope you guys enjoy these videos. They're just quick. We're going to build on these more, spend more time, but sometimes we're trading the simplest of things can be the best way, just to give you an idea of what price is doing, where it's moving to. Indicators are great, and obviously we use them in our strategies, more advanced strategies, but quite often, sometimes, if you're here and you've been watching, for a few days, price has just been dropping around, you think, right, well, where are we at with it? Then obviously use this. Now, just to give you another idea, which is something we'll touch upon, which is called a wolf wave. And again, the concept with a wolf wave is you get a couple of touches each side. Ideally, you have a 3 on one side and 2 on the other. So on this one, we've got 2. Again, that's a sign that it's actually bullish. And then you have a 1, 2, and a 3 there. So what we do is label this as 1, this is 2, this is 3. And then we've got, obviously, you could label that as an A and a B. What happens is, to get your target, again, you would join. Whichever side's got the 2 on, you go opposite. So draw it through for a line of best fit. So again, this is a line of best fit to get as many points. You can see, we've got a few points here. This seems to be support there. Then it comes at resistance. Then it was support, crash through. More resistance, and it gives you the target here. So again, it's incredible how the trend lines and the triangles work together. So definitely just use these chart patterns. We'll practice more. These work on minute 1 chart. They work on monthly charts and everything in between. So get looking on the charts this weekend if you can. I know it's beautiful weather out there, but get looking. And again, please do like the videos, subscribe, and share on social media. It's free tools. Hopefully it helps, and it will make you money. Okay, enjoy the rest of your weekend.